Well, good morning, everyone. Today is Thursday, January 9th, and the week is almost behind us. The first full trading week of the year is almost behind us. Now, today we got jobless claims. I believe I was expecting the number to be really on the low end, and the number actual is 214, consensus is 219. Unemployment numbers are great. This is telling us that the economy is super smooth. Tomorrow, we've got employment data. That's the final cap to the employment situation. It's going to tell us if the economy is further humming along. The consensus yesterday was 155 new claims. Now it's 158 new claims. Prior was 266. And I know the numbers are jumping all over the place, but the truth of the matter is it's really hard for them to be bad. This is like 60-year low. Unemployment rate, 3.5, 3.4, 3.6%. This is like 60-year low. So these are really good numbers. What I'm trying to say is it's really hard for these numbers to be better than they are right now. Even if we're a little bit off, it would be very hard for the numbers to disappoint. As long as the numbers are 3.4, 3.6%, 150, 200, 220,000, it's really telling us that the economy is just humming along really well. So let's take a look. One thing about me in the morning, I can't speak straight for some reason. So let's take a look at the gold market. As I mentioned yesterday, Iran, U.S., that was very quick. I mean, they fired at U.S. bases in Iraq. No Americans were injured. There were more people hurt or killed at the funeral for the general than via this little military coup de grace that they had 2 nights ago. So as you could see, gold peaked out. Even yesterday wasn't really doing anything. It's already filling the gap. It's already coming down. I'm expecting gold to trade lower. I'm not expecting gold to trade higher this year. And if you didn't believe me when I said that to you before New Year's, maybe you will believe me now, because if threat of war with Iran cannot cause gold to go up parabolically, at least for 2-3 weeks, then what can, right? I mean, this is a huge global issue, and typically, when you have negative global turmoil or something really violent happening, gold tends to rise. Well, think it's a coincidence? Look at the bond market. I mean, look at this. Remember I was telling you it doesn't have a lot to stand on? This is the weekly chart. Let me give you the weekly chart here. See that? Still remains in a descending triangle. Nothing new here. I want to show you this. We literally rallied for 2 days. This is it. The second day, we couldn't even close higher, and the last 3 days, we've been going lower. And so investors are not flocking to fixed income. Volatility, couldn't even go to 14. I mean, I've never seen in my life a potential act of war when volatility did not spike to 20. 20 is just the minimum fear level for the overall market. Have not seen it. So as far as this little situation, if you want to call it, with Iran, I'm not even going to call it war. I'm going to call it this minor little bump or hiccup that we had with Iran. I'm just not seeing anything else. Unless there's something totally unforeseeable happening, and I don't think it's going to happen. I mean, look at oil. This is oil. We're already close to the... We are lower now in oil, or we went lower in oil than we did before this happened. Look at the trend beforehand. Volatility went high. We only rallied again, just like the bonds, for 2 days. Second day, we couldn't even close higher. The bottom line is that RSI way overbought. The bottom line is this threat of war with Iran is over. So let's talk about the stock market. I want to show you something. Again, this is really eye-opening, and I know you're thinking, Roger, stocks have been going up. You've been talking about these overbought levels. Well, let me show you something. This is the NASDAQ 100. Notice it's going straight up. Straight up. Even right here in this little area, it's going straight up. Price level is moving up. Now look at the percentage of stocks in the NASDAQ trading above the 50-day moving average. So I'm going to make it real simple. There's 100 stocks in this index. Follow along here. This is really important, and if this doesn't get your attention, it's hard to figure out what will. I'm just giving you a hard time. So look, NASDAQ 100, percentage of stocks trading above 50-day line. About a week ago, maybe a little more, like 2 weeks ago, we were at 90th percentile. So 90 out of 100 stocks It's a total of 100 stocks, the biggest tech and growth stocks, NASDAQ, Microsoft, Intel, NVIDIA, all that other good stuff. We went, the percentage of stocks, follow along, this is important. The percentage of stocks went from 90% to 80%. So now there's only 80 stocks instead of 90 trading above the 50-day moving average. So 2 weeks ago, 90 stocks were doing this. Now only 80 stocks are doing this. 20 stocks are doing this. Last week, only 2 weeks ago, I keep saying last week because it was a holiday. 2 weeks ago, only 10 stocks were doing this. Now 20 stocks are doing this. But, price action still moving higher. So there's 100 stocks. Out of those 100 stocks, 90 were going up. 90 were going up. Now 80 are going up and 20 are going down. Instead of 10 going down, there's 20 going down. So there's 10 less stocks causing this. And it's not a theory I have. It's a fact. It's right here. We were at 90%. We were now at 80%. That's called narrowing of momentum. That's equivalent, and I've given this example several times. Imagine you're driving your car. It's a 6-cylinder. And imagine you're driving your car at 50 miles per hour. And all of a sudden, the car starts only working on 4 cylinders. 2 cylinders break. Well, and let's say you want to maintain that 50 miles per hour. Well, you're going to have to work 30% higher. You're going to have to press that gas pedal 30% higher to generate that same 50 miles per hour. And that's what we're seeing with the market. It's just as simple as that. 90 stocks out of 100, NASDAQ 100 stocks trading above the 50-day moving average. You had 90 trading above the 50-day moving average. Now you have 80. Price action is still moving higher and actually getting higher, and momentum levels are getting higher. Now, this is not sustainable. Narrowing of momentum precedes pullbacks or congestions. Now, look at the RSI. I mean, when was the last time you've seen us being in a overbought territory for this is now for 3 weeks. We've been literally overbought. The rubber band's been just doing this for 3 weeks, and it's not cooling off. So we are going to have a pullback. And I'm not expecting a big crash. I'm just expecting some softness in the market, which will cause congestion and consolidation. It's virtually impossible to go through a trend like this and not end up in a market cycle like this afterwards, what I'm showing right now. And this is a congested market cycle. And when you're trading congested market cycles with higher volatility, because you got Iran, you got China, you got impeachment, you got elections. I mean, 2020 is bringing a lot of things on our plate, putting a lot of things on our plate. So if you guys are interested in trading income strategies, and income strategies are going to be king in 2020, especially next few months, because look at this. This is stretched out to the tilt. The rubber band is not stretched out like this. It's stretched out like this. So if you guys are interested in learning how to trade income strategies, Rob Booker, one of the best traders of all time, just put together a video. It's a really great video, and it goes down at midnight. No, I'm not kidding. It's going down at midnight. Now, if you've been following my work, you know exactly what I'm expecting the market to do. Choppiness, choppiness, choppiness. And folks, this is the best way to take advantage of it. This video is going down at midnight, all right? And with all the unresolved issues we have with China, the impeachment, volatility is not going anywhere. Simple income strategy. Rob is literally going to show you an income strategy, limited risk, none of this unlimited risk, no going naked, completely hedged, limited risk strategy that's perfect for income. You'll get income deposited into your account every Monday. Watch this video, learn how Rob does it. There's very few people in this world who can do it as well and as simple and can explain it to you as easy as Rob. Watch this video, get in on this training. The video goes offline at midnight. Follow the link below. What are you waiting for? Do it now. Talk soon.